And we'll go ahead and start our presentation. Great. Just checking one last time on the sound. So thank you for those of you replying. So today we're going to talk about student loan repayment, education loan benefits, and education debt refinancing. My name is Martha Johnston. I'm the Director of Education at the Finance Authority of Maine. I actually come to higher education financing. I'm kind of shy to say with now 30 years of experience, and I come by way of having been a financial aid director for years at colleges and universities, but I was also a student loan marketer. I worked for a New England bank, and we did student loan marketing. And then, of course, my work at Fame, where I'm in really the public sector, helping all of you figure out how to afford higher education. And so for today's presentation, we're talking about how to manage your student loan repayment. So hopefully some of you have been able to join us earlier this fall. We actually did a presentation in October about how to apply for financial aid. So if you or someone in your life is looking at going to school next year, four-year college, two-year community college, certificate program, any education beyond high school, we provided a webinar back in October. In November, we did a webinar about saving for college, and we really wanted to plant the seed because the end of the year is coming upon us. It's a gift season. And a lot of times people think, well, what should I do? And so we like to remind people, well, it's a good time to either fully fund your college savings account or to give the gift of college savings for maybe a person in your life who's preparing to pay for education. And so then today brings us to our third and final webinar for 2020. And again, it's about managing student loan repayment. I will say that many of our comments today will be discussed through the lens of the pandemic. That shouldn't be a shock to anyone. That's what we're in the middle of, and that's the information we feel that will be most pertinent for all of you. So for those of you who might not be familiar with the Finance Authority of Maine, we are an independent state agency working to help people pay for higher education. We actually also do economic development work. So some of you might know us from your business activities. We actually consider those two things very linked. We don't consider them separate. But when we describe them, we talk about helping people pay for higher education, but we also talk about helping Maine businesses through economic development work. And so we're very proud, and we see those things very much linked, helping people qualify for good paying jobs and then helping our Maine businesses provide good paying jobs to Maine people. In education financing, the resources that we provide include paying for college, and that includes managing student loan repayment, as you've heard me say already a few times already, financial wellness, and Mary is our financial education wellness guru, so she's our financial education officer. We talk a lot about saving for college. We provide counseling regarding college access and financial education. And then last but not least, we actually do have an education customer service team located right in Augusta, available to help you with any questions you might have, whether you want to contact us via email or if you want to contact us via our 800 number. They are available Monday through Friday, 8 a.m. to 4:30 p.m. Certainly you can email us at any time of day and we will respond as soon as we're able the next business day. And then our website, famemaine.com, has a wealth of information on all topics related to financing, education, and then of course, don't forget that economic development side as well. So for today's agenda, we'll talk about student loan repayment. And as I mentioned, we will do a lot of that in through the lens of the pandemic and what's currently happening. I will talk a little bit about public service loan forgiveness because I do think that that's one of the biggest features around student loan repayment that people will often have questions about. So we will touch on that today. We'll talk about education loan repayment benefits, and I'll do that from the perspective of an employer if they're offering a repayment benefit, but then also from the perspective of tax credits and tax deductions. We'll talk about refinancing education debt, and then I will talk a little bit about financial wellness. I think one way to frame today's discussion, when we talk to families and students about affording education, we often ask them to think of it as a puzzle where they're putting many pieces together to make a whole. So maybe they're doing a payment plan at the college or university, they're using a little bit of savings, and maybe they're doing a little bit of borrowing. I would actually apply that same lens to what happens when you're managing student loan repayment. So you're managing your student loans out of your cash flow. Maybe you're qualifying for some kind of forgiveness or education benefit through your employer. Maybe you're taking advantage of tax credits, or you should be taking advantage of tax credits or tax deductions. And then last but not least, maybe financing or refinancing your education debt is something that will help you move your financial goals further into view. And then financial wellness. What are things that you can do in your own life to kind of get your financial house in order? We won't go into too much detail today on that, but I just think it's really important for you to feel like you have all those levers at your fingertips that you can move and twist and pull so that you can meet your goals, especially managing your student loans. So when we talk about student loan repayment, we like to break things down into quick and easy steps for people. So whether or not you're already paying your student loans or you're about to go into repayment on your student loans, we think it's worth focusing on these 5 steps. So even if you're paying your loans, revisit these 5 steps. Make sure you've done them all. So locate your loans. Do you know exactly where your loans are? Who's the loan servicer for each of your programs? Do you understand the different repayment options that are available to you? Maybe you're in the repayment option that you just happened to fall into after you graduated, but maybe there are other repayment options that you could explore, especially as you look at other financial goals that you want to meet. And that's especially true not just for your federal student loans, but if you also have private student loans as well. We want you to investigate and look for programs that will assist you with student loan repayment. I already mentioned public service loan forgiveness, and I will talk about that a bit today, but there could be other programs out there that offer forgiveness. Some people have heard of the Alphon Leaders Program. That's a program that we administer here at the Finance Authority of Maine, but it's a debt reduction program for people who work and live in Maine and work in a STEM occupation. That's just an example of a different type of loan forgiveness or loan repayment program. But when we say investigate, that's the type of thing that we're talking about. We also want you to learn more about federal or Maine-based programs that provide assistance. When we say that, we often mean it from the lens of a tax deduction or a tax credit. But what I just mentioned about the Alphon Leaders Program, that also might be something that would fall into that bucket. So learn more. Are there programs out there that you could qualify for that would help you pay off your student loan debt early or help you with some kind of repayment, which would be really wonderful. And then last but not least, research federal loan consolidation. I'll touch on that today, but I will also make sure that I explain what education loan refinancing is, because that's a hot topic and sometimes they get confused or blended together, and they are different, and we want to make sure that you understand them so that if you decide to use them to help meet your financial goals, that you're very clear what those things are. This is just a nice piece that goes along with those 5 steps. I've provided the link to the PDF in the presentation. So if you're someone that wants to download that and just have it at your fingertips, you can get that right off of our website. You can even order a copy if you wanted to have a hard copy for yourself. But again, it goes into a little bit more detail than what I provided you on the previous slide, with making sure that we provide links and different sources of information under each of those categories. So remember, locate, understand, investigate, learn more, and then do some research. And that's the way we would approach every person as they enter student loan repayment, to really kind of get themselves organized, get all their ducks in a row as they enter that process. But as I said previously, if you're already in repayment, it doesn't hurt to go back and go through these 5 steps just to make sure that you haven't left anything no leaf unturned, if you will. All right, pardon me. There we go. We also want to make sure that you understand that there are resources available in addition to what FAME provides. ECMC is an organization that we work with closely in Maine to provide student loan counseling. And so that's a great organization. We want to make sure that you have ECMC's information, and you can certainly contact us if you have questions as well, but also the Institute of Student Loan Advisors. Again, free student loan advice. They're not trying to sell anything. Just objective, neutral advice for people trying to really understand and navigate the student loan repayment process. So again, we also want to make sure that you understand all the resources available to you, not to overwhelm you. I'm sure the links and the websites will be overwhelming today, but to just give you a place to start from. So now we will switch to the pandemic, and we'll talk about student loans during the pandemic and the lens that we're looking at things through these last 9 months. So what is the current status of federal student loans? Well, for any of you that are in repayment on federally held, and you could also use the word owned, federally owned student loans, all of your interest rate has been frozen and your payments have been suspended since March 13th. And that was through a combination of things. It was through a combination of an executive order by President Trump in the middle of March, but then there was also something called the CARES Act, which was enacted by Congress at the end of March. That was set to expire originally in September, and then through another executive order, President Trump extended what's currently allowed as these accommodations through the end of the year, so December 31st, 2020. I take the time to say all that because if you're paying attention and you've seen these different dates in the news, I just want you to realize you're not confused. You did hear all those dates. So it started in March with an executive order. We had the CARES Act. It was set to expire in September, but another executive order in August by the president extended it to December. So again, interest frozen on federally held loans and payments suspended on federally held loans. That does include a Parent Plus loan. So if anyone here listening has a parent loan in their name that they borrowed for a son or daughter attending college or community college, that if that's federally held, it also qualifies for these accommodations related to the pandemic. So which loans are federally held? Well, essentially, mostly all loans that were originated after July 1st, 2010, and they're referred to as direct student loans. It is very possible that you might have some older loans that are federally held or other types of loans, a federal Perkins loan, for example, that are federally held. Most of these older loans are commercially held, and most of the Perkins loans are held by individual colleges and universities. We just want to make sure that you understand the difference between federally held and not federally held, and it can get confusing, so we're happy to answer any questions you might have about that. One thing that we would recommend, if you're not sure if your loans are federally held, if you have older loans prior to 2010, if you have a PLUS loan, so a parent loan for undergraduate students, or a Graduate Plus loan or Perkins loans, you can actually go to studentaid.gov and you should have an FSA ID username and password. If you don't, you can create one, but you can actually log in and be able to see your federal student loans and the servicer. You can also call Federal Student Aid Information Center at the 800 number that's listed here to find out whether or not your loans are federally held or whether or not they're commercially held. And then that will let you know whether or not you qualify for those interest rate payment suspensions and the frozen interest rate. I'm going to pause here also just to mention that even if you don't have loans that are federally held, so even if you do have older federal loans, that doesn't mean that there can't be assistance there available for you if you're having difficulty making your payments because of the pandemic. All federal student loans typically have accommodations attached to them called economic hardship deferments or forbearances. Those are different things that the loan servicer can work with you on to see if you qualify for in case you are having difficulty. So even though you might not qualify for that interest rate suspension and that payment suspension, please don't despair. If you're having difficulty, call your loan servicer and they will let you know what options are available to you. What about federal student loans that are in default? Well, default basically means someone hasn't been paying their loans for more than 270 days. So they've entered into a very difficult time financially and they haven't been able to make their student loan payments. And it does happen. We always want to help people get out of student loan default, but defaulted loans are also being provided for, in a way, a special accommodation related to the pandemic. So involuntary collections are suspended on federally held defaulted loans until December 31st, and that includes wage garnishment, tax refund reductions, or reductions in any other federal benefits like Social Security. So again, federally held student loans that are in default have had special pandemic accommodations made for them through December 31st, 2020. And we wanted you to be aware of that today as well. So what happens to federal student loans after December 31st? I wish I could give you a list of bullets and tell you that I can predict the future. The truth is we don't know what's going to happen. So there's a number of things that could happen. President Trump could actually sign another executive order to extend the benefits that are currently in place related to the pandemic. So that is a possibility. It could be that there will be a gap in time between January 1st, after these benefits expire, and before the new presidential administration comes into office in mid-January. So we're just going to have to watch that very closely. So I think the message I want to put out to all of you today is, if you are experiencing zero interest rate, suspended payments related to the pandemic, just watch carefully what's happening. FAME will also be monitoring that very carefully. And as soon as we have any information, we will update our website to let you know what the federal student loan accommodations are after December 31st, 2020. So far, we don't have any news on that yet, but everyone's waiting to see what will happen. So what if you have loans that are not federally held or private loans? Well, you already heard me mention, if you have federal student loans that are not federally held, they're older, you can call your loan servicer. The same thing applies to your private student loans. So you can actually call the loan servicer of your private student loans and ask them what kind of accommodations they might have in place that could help you during the pandemic. Different lenders have done different things. They certainly have economic hardship or forbearance opportunities available to them to offer you. They're not the same as the federal programs, and they can't be the same as the federal programs because these are private lenders that are regulated by banking laws. So they do as much as they can do. They might not be able to do as much as the federal government can do, but that doesn't mean that you shouldn't give them a call and ask what kind of accommodations could be made to help you if you're having any difficulty. And what about FAME administered loans? Well, the Finance Authority of Maine does actually administer quite a few loan programs. We have the Maine loan, Maine medical loan, Maine Medical Association loan, Educators for Maine. We also do different health profession loans for dentists, veterinarians, and other health providers. So if it's any loan that you have, or that you have a colleague or a friend that we administer, they can give us a call directly, and our customer service team will be able to tell them what's available to them related to any assistance we can provide because of the pandemic, because of any financial hardship they might be experiencing. Oops, went backwards. And then there are also some really great websites available related to student loan resources through this pandemic lens. So studentaid.gov, if you go onto that website, first thing you'll see is coronavirus and forbearance info for students, borrowers, and parents. It's actually a great website with a lot of detailed Q&A, so a lot of detailed question and answers. So I highly recommend going to that website. And then also studentaidpandemic.org, again, a third-party, neutral, objective set of information to provide you as much information as you might need as you're navigating student loan repayment in the pandemic. So we highly recommend these two websites in particular. So what about public service loan forgiveness? Again, it's one of the biggest programs, if you will, as far as notoriety and what you read in the news. So I wanted to make sure that we touched on public service loan forgiveness. That basically allows the remaining balance of your federal direct loans, including direct consolidation loans, to be forgiven after you've made 120 qualifying education loan payments. It has to be that you are in a qualifying repayment plan and that you work for a qualifying employer. So that's a lot of qualifications, as you can see my little tongue in cheek at the bottom of the slide. So I want you to understand what those qualifying payments are. Those are payments made by you after October 1st, 2007 for the full amount due as shown on your bill, and no later than 15 days after your due date. Please, when we're talking about the public service loan forgiveness, don't think of it in the pandemic right now. Just think about it as the way it is. Maybe pretend this is the first time you're hearing about the program. So this is what public service loan forgiveness is. Those qualifying monthly payments can only be made during periods when you're required to make a payment. So you can't make a qualifying payment while your loans are in school or grace period or deferment or forbearance. So if it's not a required payment, you can't make a payment and have that be a qualifying payment. I know that sounds kind of strange, but it's basically saying that you're in a repayment status and you're making those required payments as part of those qualifications. You have to be in an income-driven repayment plan that sets your monthly student loan payment at an amount intended to be affordable based on your family income and your family size. And there are 4 income-driven repayment plans. I've listed them below. But again, if public service loan forgiveness is something that you think you might qualify for, these are the types of things that you'll need to be aware of and that you'll want to look into to make sure that you set yourself up for public service loan forgiveness. There also could be that there's a young person in your life who's just recently graduated. And if they're going to be working at a qualifying employer, you'll want to share this information with them. And that takes me to my next slide, which is what is a qualifying public service loan forgiveness employer? Well, qualifying employers for public service loan forgiveness, it's not about the job that you do for your employer, it's about who your employer is. So employment with the following types of organizations would qualify for public service loan forgiveness. So any government organization at any level, so federal, state, local, or tribal, work for a not-for-profit organization, so tax exempt under IRS code 501c3. And the mailman just came. Hopefully you can't hear that too much. Other qualifying employers are not-for-profit organizations that are not tax exempt under 501c3, but if their primary purpose is to provide certain types of qualifying public service. And then serving as a full-time AmeriCorps or Peace Corps volunteer also counts as qualifying employment for public service loan forgiveness. So it's basically you're not working in the for-profit world, you're working in a public sector or a not-for-profit or mission-based organization, like FAME, for instance. We wouldn't be a 501c3, but we would be somebody providing public service. That would be a great example. You should complete and submit the employment certification for public service loan forgiveness every year, so annually, and when you change employers. I really think that this is one of those cases where it's better to do too much than to sit back and say, oh, I think I'm all set. This is one of those times you want to dot every I and cross every T, and I'm sure that's what you've heard about in the news as well. So you just want to make sure that you understand what it is you have to do to set yourself up to qualify at the end of those 120 payments. And you can certainly learn more about public service loan forgiveness at the studentaid.ed.gov website. Again, they have done a tremendous job putting together information in Q&A format about public service loan forgiveness. So I highly recommend taking the time to look at that if you think that's something that you could be qualifying for. So to go back to our regular topic of the pandemic, what does that mean in light of public service loan forgiveness? Well, it was a little confusing in the beginning, and that's for sure. And I highly recommend the blog that's run by studentaid.gov called Homeroom. And the one obviously that's featured here on this screen is 6 things you need to know about public service loan forgiveness during the COVID-19 emergency. But the biggest one is that suspended monthly loan payments actually will count towards your 120 required payments. And so that's, counterintuitive. Nothing makes sense as it's coming out of my mouth. But I think if you focus on what's in parentheses, it all makes sense. So if you think of those monthly payments as a 0 monthly payment, well, you've made that payment and it's qualifying. But I highly recommend that you spend some time not only with the regular public service Q&A, but on this blog, so that you're aware of anything you need to know about public service loan forgiveness as it relates to the pandemic. So I'm going to pause real quick and just check with Mary to find out whether or not we have any questions.
No questions at this time, Martha. Thank you.
Okay, thanks, Mary.
Yep.
Okay, so we're going to talk about employer repayment of student loans as one of those education loan benefits. We're also going to talk about tax credits, and we're going to talk about tax deductions. It won't be a ton of slides, but these are things I want you to be aware of. I'm trying to plant the seed to make sure if you haven't been taking advantage of these things that you look into it, whether you do your own taxes or you use a tax professional to make sure you consult them, so that there could be one more tool in your toolkit to help with your loan repayment. So you heard me mention earlier about the CARES Act that was enacted at the end of March. Well, in addition to all those other things related to student loans, there was a great thing that happened where the definition of educational assistance that an employer could make to an employee was expanded to include qualified education loan payments. And it was just for this year, for this period between March 27th and December 31st. And so an employer was always able to make up to $5,250 in educational assistance available to its employees, non-taxable to the employee. But during this period related to the pandemic, that got expanded to also include payments made on the employee's student loan by the employer. So I think that was a great thing that got added. Who knows if it will be extended beyond December 31st? That falls into that slide where I said, what happens after December 31st? We're not sure. But if this is something that you want to talk to your employer about, maybe they're aware of it, maybe they're doing it, just double check with them. And again, great information available directly on the IRS website about this provision, because it really lands with the IRS, because there's a lot of discussion about the taxability of it as it relates to the employee. So that's why you see yourself directed to the IRS website on this link. But again, something that's worth looking into with your employer. So I'm going to talk about next tax credits. And for some people, I like to define tax credits and tax deductions because I think sometimes they do get mixed together. And so I don't make any assumptions about people's tax knowledge. I am not a tax professional myself, but I always think it's a good reminder. So a tax credit actually reduces the amount of tax that you pay. And so the example that I've given on the slide is if you owe $5,000 in taxes, but that you also qualify for a $2,000 tax credit, then dollar for dollar, your tax liability of $5,000 is now reduced by the amount of your tax credit. So now you only owe $3,000 in taxes. So that's what a tax credit does. It's a very powerful tax benefit because it's dollar for dollar reduction of your tax obligation. And so sometimes these tax credits are refundable, not always. But if they are refundable, the example can look a little different. So I provided you with an example. Say you only owe $1,000 in taxes, but you qualified for a $2,000 tax credit. Well, then that extra $1,000 in the credit will actually be refunded to you. And again, it depends on the type of tax credit it is and if that tax credit is refundable. So I just throw that out there as a definition so that you're aware of what a tax credit is as we're talking about this next tax credit as it relates to education loans. So in particular, what we're going to talk about are Maine tax incentives. So this only applies to Maine state taxes. This does not apply to your federal taxes. But in Maine, we have a tax credit known as the Educational Opportunity Tax Credit. I'm going to call it EOTC. It's also called Opportunity Maine. I shared the logo, so in case you see that and you need the visual, you'll know you're looking at the right thing. EOTC can be taken by an individual who made payments or by an employer who made payments on behalf of its employee on their student loans. So an employee and an employer are not allowed to both claim the credit. So only one or the other could claim the credit. And payments made by employers are generally treated as income to the employee. Now, I will talk about this a little later, so there's more slides to come on this, but I just wanted to frame it. So this is a tax credit for your state of Maine taxes, and it would reduce your tax liability to the state of Maine dollar for dollar, depending on the amount of the credit that you qualify for. So the amount of the tax credit is based on the employee's year of graduation, the type of degree they have. And the reason that's important is because it actually is a refundable credit if you have a STEM degree. And STEM means science, technology, engineering, mathematics. And it depends on your student loan payments made. And so for a bachelor's degree, in 2019, because that was our last tax year that we just completed, the amount of the tax credit could be up to $4,404. And that's quite a rich benefit. Now, it doesn't mean that you would qualify for that amount because it depends on how much you were paying in your student loans, but you wouldn't qualify for more than that. So that's what's really important about that. And then for a graduate degree, up to $4,056. So again, it doesn't mean that you would qualify for the entire credit because it's based on what you made for payments and other qualifications. You do have to apply annually when you fill out your Maine state tax return, and you actually submit a form along with your tax return. It's a worksheet that helps you calculate the amount of your educational opportunity tax credit. So what education loans qualify for EOTC? Well, eligible public or private education loans. So whether you public, we say, whether you borrowed a federal student loan or another public student loan, might be a loan that you got from the Finance Authority of Maine, say Educators for Maine, or a private education loan. So maybe you got a loan through a different lender, Discover Student Loans, Sallie Mae, Citizen Bank, the Maine loan. And that they were part of your financial aid package at the college or university. Refinanced education loans might also be eligible as long as the refinance loan remains separate from any other debt incurred. I guess the best example to give you on this would be if you're someone who took out, say, a home equity loan and you paid off your student loans with that and you paid off some house projects with that. Now you're no longer able to take the educational opportunity tax credit based on payments made on that home equity loan because it's no longer an education loan. So hopefully that makes sense. So it's really got to be a pure education loan or a pure education refinance loan. So no other debt was brought into that. Loans taken by parents to fund their child's education are not eligible for EOTC. That might be pretty disappointing to people. But private education loans co-signed by a parent would qualify. So essentially, if the student has a private student loan that they are making payments on, even if it's co-signed by a parent, he or she could use that loan to see if they qualify for the educational opportunity tax credit. And then what payments qualify for EOTC? Well, payments on education loans must be made on behalf of eligible graduates directly to the lender, and student loan payments made while the individual was a resident and worked in Maine. So that's important information to have about the educational opportunity tax credit. So just a few more details. If you're an individual and you want to take the tax credit, I'm referring to you as the employee here, the credits up to the monthly benchmark rate for each qualifying education loan payment made that tax year. So for instance, if there's a maximum monthly amount that totals that $4,400 I was referring to earlier, and your monthly payment was lower, then you would qualify for an educational opportunity tax credit up to the amount that you paid over that qualifying period, but not higher than that total amount. And I think, again, if we look back at that slide a couple slides ago, it was about $4,400 for a bachelor's degree. That's what they're referring to when they're talking about the monthly benchmark. It's aggregated so that $4,400 represents 12 months of the monthly benchmark. Hopefully that makes sense. It may or may not be refundable depending on the year that you graduated and whether or not you're a STEM major. So you heard me refer to that earlier about STEM majors. And generally speaking, you must have graduated with an associate's or a bachelor's degree in 2008 or later from a Maine-based school, but that's no longer a requirement for 2016 graduates and later. This is where it gets a little sticky. Opportunity Maine, or the Educational Opportunity Tax Credit, has been with us since 2008. It's a great tax credit. It's a very rich tax credit, but it's a little complicated. And so I highly recommend that if you're not sure if you might qualify, I would go to liveandworkinmaine.com. They're one of our partners in advertising the tax credit, and they do a great job with an infographic. And I know that sounds a little crazy, but the infographic really helps break it down by the year that you graduated and your different degrees so that you could see where you would fall as far as eligibility for the educational opportunity tax credit. So if that's something that you haven't taken the time to look at, I would definitely recommend going to the Live and Work in Maine website and look for Opportunity Maine. It's in one of their drop downs. And again, the infographic is very easy to understand, but actually very complete as it relates to the information that's provided. So also the educational opportunity tax credit, as I mentioned before, can be taken by employers. And again, the credit can be up to the monthly payment made for each qualifying student loan payment made per employee in that tax year. It removes the benchmark rate cap and applies to the state of Maine taxes only. So again, it doesn't apply to federal taxes. In the case of the employer, it's not refundable, but excess credit can be carried forward for up to 10 years. And so if you're an employer considering this, I'm sure you have a tax professional that you work with to prepare your corporate taxes or your business taxes. And so you'll want to see whether or not this might be beneficial for a lot of reasons. Maybe because you could use it as a recruitment tool or a retention tool for great employees that are already with you. But also it could help you with your own tax situation as a business or as a corporation. So generally speaking, you must have graduated in 2008 or later from any US-based accredited school. But for employers, that requirement is removed when the employer is paying it. But it does provide a great way, as I mentioned before, to attract people to live and work in Maine, or to retain your really great employees who are living and working in Maine, but maybe the cost of their student loans relative to the cost of living and other expenses, maybe they just need to realize this is one more tool in their financial toolkit that can make it possible for them to stay in Maine or to hit other financial goals. So again, employee and employer are not allowed to claim the credit at the same time, and then payments made by employers on behalf of an employee are generally taxable to the employee. So I just wanted to make sure that we called that out a second time. So Eotc has a great frequently asked questions link on their website. So that's part of the Maine Revenue Service. And I highly recommend spending some time with that Q&A if you're not sure if you qualify for that, or call your tax professional. And then there is a COVID-19 FAQ for all of Maine Revenue, but there are some questions on that in particular that relate to Eotc. So I provided that link as well, just in case you have questions related to your eligibility for 2020 and the status of your loan payments during 2020. I do know that relative to certain items on that Q&A, they did mention that there's possible legislation that will be introduced in 2021 by the legislature to make sure that people aren't hurt by the pandemic as it relates to qualifying for the tax credit. But I would highly recommend going to that Q&A and looking at that question in particular. And nothing's for sure. It's just about proposed legislation, and they don't exactly outline what that legislation will look like. But I think the really positive takeaway is that they're thinking about it and thinking about how to help people still qualify for the tax credit, even with the change in student loan payment requirements during 2020. So it's definitely been a strange year on that front. So I talked about tax credits and what those are, and tax deductions. I just want to define them so people understand how they're different. So a tax credit reduces your tax liability dollar for dollar, whereas a tax deduction actually reduces the amount of taxable income. So you could say it's not as robust. It doesn't mean that it's not a great tax benefit that you shouldn't try to take advantage of if you qualify. It's just applied differently. So in the case of student loans, this is for your federal taxes, not your Maine state taxes, but there is a federal student loan interest deduction up to $2,500 for interest paid on qualified student loans. This deduction does have an income limit that's attached to it. And as I mentioned previously, it only applies to your federal taxes. So the tax credit we talked about was your Maine state taxes. This interest rate deduction, or this interest paid deduction on your student loans, relates to your federal taxes. And again, I'm sure you have a tax professional that you work with, or depending if you're using some of the softwares that are out there, they would also be programmed to understand this tax deduction and ask you questions related to your student loan payments to see whether or not you qualify for that. But if you like to dig into the weeds and the details, you can go to IRS Publication 970 and you'll actually see all education tax benefits. And this one in particular has to do with the federal student loan interest deduction. I'm going to pause real quick here, Mary, and find out whether or not we have any EOTC or employer or interest deduction questions.
There was a question, Martha. Are there any options or programs known in Maine for private student loan refinancing?
Sure, that actually leads us right into our next section.
I thought you might like that.
That's great. So whoever asked that, thank you for my segue. So at the Finance Authority of Maine, we actually work with Maine lenders and credit unions who want, not all lenders and credit unions are part of this program, but they could be, to provide education loan refinancing for Maine people. So we created a website called theloanforme.com, and it was specifically created to help make sure Maine people were informed about their local Maine options for private student loan borrowing if they were in school, but also about refinancing education loans. And so we try to provide as much helpful information through FAQs, videos, tools, and calculators, but we also tell you who the main lenders are that will provide this type of education loan refinancing. So that leads me into all my next slides, which I hope you'll find helpful. So generally, when someone wants to refinance their education loans, the goal is to make their student loan repayment more manageable. So they might want to have a lower interest rate or change the type of interest rate. Maybe they want to have a fixed interest rate and they've been variable. They definitely would love a lower interest rate, wouldn't we all? And then lowering our monthly payment if possible, or modifying the length of your repayment term. So when I often think about refinancing a loan, I think, oh, can I get a shorter repayment term? If I have 20 months left, can I knock it down to 15? Some people might go the other way. They might actually want to go out for more months than what they had left. And of course, they might pay more in the long run, but maybe they're trying to free up cash flow because they want to meet some other financial goal. Maybe they want to buy a house. Maybe they want to start a business. And they just need to have that lower monthly payment. So they need to extend from 15 months out to 20 months. So everyone's reasons for refinancing are different. And every reason is valid. We just want to make sure you have the information that you need to make a good choice for your situation. So I do want to talk just briefly about the difference between consolidation versus refinancing, because those two things, those two terms are used interchangeably and they can mean very different things. When we're talking about federal student loan consolidation, that is a federal student loan program that takes all your federal student loans that you elect to consolidate, combines them together, you get a brand new term, and you have one loan, one payment, and your interest rate, and this is the big difference, your interest rate is a weighted average of all the different types of federal loans that you brought into that consolidation. And I'll just give you a really easy example. If you brought a $10,000 direct loan into the consolidation and it had a 3% interest rate, and you brought a $5,000 Perkins loan and it has a 5% interest rate, then the combined weighted average is going to be somewhere in between 3 and 5, right? It's not going to be more than 5, but it's not going to be less than 3. So it's going to be a weighted average of the loans coming into that consolidation. Refinancing is different. Refinancing is a brand new loan, brand new terms, brand new rate. So everything that existed in those old programs is gone. You've got a brand new loan. And for anyone who has had a mortgage and refinanced their mortgage, they know it's a brand new mortgage, brand new term, brand new rate, all starting from scratch, whether it's a 15-year, 20-year, 30-year, whatever that is. So that's the big difference between federal consolidation and refinancing. The benefits of refinancing, it could reduce the overall cost of your higher education debt depending on the interest rates on your current loans. It could reduce financial stress because you're trying to free up cash flow, monthly cash flow. You want a lower payment. It could be that it's having a monthly lower payment is what allows you to live and work in Maine relative to your other expenses. And as I've said a number of times, because I'm a huge proponent of this, it could help position you to meet your other financial goals, whether that's to pay off other debt, whether or not you're seeking to own a home, or maybe you want to start a business and become an entrepreneur. So for education loans, for refinancing education loans in Maine, the program that we assist private lenders with, so we act as what's called a loan insurance. So essentially we provide loan insurance so private Maine lenders can actually refinance your education debt. All right, because if you think about it, that's a large, it could be a large debt that's unsecured, right? And so when we step in as an insurer, it helps the lender to be able to make that loan. And so in the case of the program that we do with Maine lenders, you can refinance and consolidate. So think of consolidation as combining and refinancing as creating a brand new loan, your private student loans and your federal student loans. But I would caution you, you don't want to include federal student loans in a private refinance if you're pursuing public service loan forgiveness. If you think federal consolidation is a better thing to do for your situation with your federal student loans. So to answer the person's question, yes, you can just refinance your private student loans. You can leave your federal loans off to the side as their own entity, keep paying those the way you always have, but you can refinance your private student loans into one new refinance loan, education refinance loan, and you can do that with a Maine bank or credit union. So these are credit-based loans. So you do have to have a decent credit score. You do have to have a debt to income ratio calculation. And that's basically a calculation to make sure that you can afford the monthly payment based on the income that you have. The lenders that we work with offer both fixed and variable rates. So if you're someone that just loves a low rate, even if it's variable, you've got that option. If you're someone that likes the predictability of a fixed rate, you have that option as well. The loan limits, because this is a refinance loan, these tend to be larger balance loans. So the minimum is $10,000 and the maximum is actually $250,000. That is not a typo. Well, it's a typo on the screen, but it's not a misstatement out of my mouth. So forgive me for not having that corrected on the slide, but the maximum is $250,000. You can have a 15 or 20-year term depending on the lender. And then there is something called a guarantee fee, and the guarantee fee is based on your credit and based on the lender. So there is a zero fee option available, and hopefully you would qualify for that zero fee option. Now, if you don't qualify for the zero fee option and you need to pay a guarantee fee, you might decide, well, that's worth it to me because the most important thing for me is to get this lower interest rate, to combine these private student loans into one payment that's more manageable. And I just don't want the headache of having lots of payments to lots of different places. And so again, that's a decision that you'll make. And something at the Finance Authority of Maine that we feel really strongly about is financial education. So we actually require a financial education module as part of the application process, because again, we just want to make sure that you have all the information that you need in order to make an informed decision. And so we hope that you also appreciate that financial education is part of that application process that we offer in partnership with the Maine lenders that we support. So the Maine lenders that are currently offering refinance, Infinity Federal Credit Union, Bath Savings Bank, UCU, so University Credit Union, Seaboard Federal Credit Union, Maine Savings, Maine State Credit Union, and Bangor Savings. So I've just done a snippet to show you a comparison of UCU and Bangor. Don't read into that. They just happen to both be fixed, but there are variable options as well. So again, it's a great website. It's theloanforme.com, and it allows you to see all the lenders. You can see if they offer fixed or variable, and then you can actually select which lenders you want to look at side by side. And that's all I did in order to create this little snippet that I put on the slide here. So if you're seriously considering refinancing your private student loans and you want to stay with a Maine lender, I definitely recommend looking at theloanforme.com to help you figure out whether or not there's a Maine lender that will meet your needs, and we hope there is. We would also just put some caution out about refinancing. We think that it's not necessarily the right thing for everybody and that you should go into it very carefully and that you should just go into it completely informed. And so you already heard me say, don't pursue putting a public service loan. Well, if you are pursuing public service loan forgiveness, do not put those federal direct loans into any private education loan refinancing, because once you do, those federal loans no longer exist. It's a brand new loan. So if your public service loan forgiveness or federal consolidation is just something that works for you, keep those separate from any kind of private education loan refinancing that you're looking at for other loans. Do beware of student loan debt relief offers and credit repair deals. They're usually, if they sound like they're too good to be true, they are. And a lot of times they'll charge a fee for information that's completely free to you, especially when you think about what FAME has done related to putting together the loanforme.com and our 800 number to answer any questions that you have. You really don't need to pay for those types of services. And you can also call your loan servicer. They might also offer private education refinance. And so, that's certainly something to look into as well. And then last but not least, I think I mentioned this in the beginning and I'll close with it, but I always think that our own financial wellness and our own financial capability is another great lever. It's another tool in our toolkit to help us as we try to, make our financial goals a reality. And so I did want to include them in today's presentation. Don't think we're lecturing. We're not lecturing. We're just throwing it out there as far as what we hope you find helpful about getting organized around your own finances, identifying your spending leaks. I can tell you right now, I have two big spending leaks. Their names happen to be Sam and Zoe. They're both in college and they're graduating in May. So I think those spending leaks are going to seal up pretty soon. But all kidding aside, there are probably tons of spending leaks in my daily activity that I could really tighten up. And so I love doing this presentation because it reminds me that I'm not an expert. I need to go back and revisit my own financial house, if you will. Create a spending plan and evaluate it regularly. I actually do say this all the time with my daughter in particular. She definitely likes to spend. And so there's no way I can look at her and say, stop spending. But what I can say is, okay, if you're going to spend, at least make a plan, evaluate it regularly and make sure that you're paying your bills. And so I'm getting her there. It's taken a little bit of an effort. She's a bit of a project on that score. And then reduce expenses. Every bit of savings adds up, whether you can reduce your food costs by making your meals at home. Can you combine cell phone, internet, and cable? Travel expenses. I felt kind of funny. I almost took this bullet out because I realize a lot of us aren't traveling right now, especially with COVID. But I left it in there because I'm optimistic that 2021 is going to bring some new opportunities, hopefully. And so when we travel, are there different ways that we can travel and save money in how we do that, whether it's regular daily commuting or whether or not it's a trip and we can use credit card points and things like that. So, and then look for free banking, again, anything that helps get your financial house in order. And again, every little bit helps. That's the way I look at it. Every little bit helps. And then taking control of your debt. I mean, again, certainly that's something that I have worked on throughout my life with debt. My husband was a business owner for years, and so we would always kind of grapple with that as a business, managing those expenses. But then I also think about that as a parent and looking at my children and their student loans. So avoiding the minimum payment trap, spending on a credit card only what you can afford to pay off in full every month, and try to find more free money with points on that credit card if you can. Pay off your higher interest rate credit cards and higher interest rate loans first. That probably goes back to that refinancing question for your private student loans. I mean, if those are your higher interest rate loans, refinancing might be one way for you to take control of your debt. So that's a great thing to consider. And then this last bullet, consider snowballing. This is my favorite thing. Mary can speak to these items far better than I can, but I love the concept of snowballing. And it's basically to pay off a low balance debt first, and then to take the money that's been freed up because you're no longer having to make a payment on that debt and make a bigger payment on the next debt that you want to pay off. So you're snowballing the next payment on the next debt. So I always think that that's such a great concept, and that's a great visual. And I've actually been approached by a lot of student loan borrowers who've told me that's exactly what they've done when they have really tackled getting their student loan debt under control early and quickly. That was just a goal that they had. Oops. Oh, sorry. Hopefully, are you there?
We're still here.
Okay, I got a weird message on Zoom, so I panicked a bit. No, cancel. Can you see that on my screen where you see the Zoom message?
No.
No, okay.
Presentation.
Okay, great. So I'm not going to worry about the Zoom message, but I will say last but not least on the screen is to establish emergency savings, even if that's modest. So again, don't, that's an important part of your financial goals as well. And it wouldn't be this presentation if we didn't have a slide with even more resources. And again, a lot of these resources do have a coronavirus COVID-19 pandemic lens right now, because that's very pertinent to all of our lives. And so we did want to make sure that we shared these additional financial wellness resources with you as well. So whether it's the CFPB, the Consumer Financial Protection Bureau, iGrad, who we work with for financial education, has great resources related to financial health during the coronavirus. And then of course, the top link, our own money management tools on the FAME website. So I've done a ton of talking today. That's actually our last slide. I will pause. I realize we're hitting 1 o'clock right now as we speak. So I just want to find out if there's any last minute questions. And I'm sorry we ran so tight, but I hope you found the information useful and that you would recommend your colleagues to come visit our website, where we will post the recording of this webinar.
Martha, there are no additional questions at this time.
Okay.
We did have one question about our ability to share the presentation itself with registrants, and I think that's something we can do with no problem.
Yep, absolutely. We can change this into a PDF and then send it on. That's absolutely fine, and you'll have those links available to you. Great. Well, I'm going to take the time to say thank you for taking the time to join us today. We are putting together a series of webinars for the spring. Topics to be determined, but we are working away at that, and we should have those all outlined and ready to go by January. And we will continue to share that information with you through any channel available to us. So if you have ideas about how to get the word out about the resources we have available for Maine people, we'd love to hear that too. So thank you all and have a great day.